Welcome back. Let's talk about markets and stocks. Jigar Mistry of Boyne Capital is with us. Jigar, before we get to the already listed names, I wanted to get your thoughts in on Zomato. It's already seen a total subscription of 5 times as of 10:30 a.m. this morning, and I suspect the floodgates will only open towards the end. Would you recommend to subscribe?
It's difficult, so we are not sort of getting ahead on that one, Rima. But see, I can see the allure of a name like Zomato. You look at a lot of internationally listed names, Meituan, DoorDash, few European listed names. They're all trading at 7.5, 8 times sort of GMV. It's looking like this is a homegrown company which will be, a concept play. And whenever these concepts plays are sort of involved, you have seen, a lot of interest around those names. So I would think that, it becomes an interesting play. But, if you are looking at playing the reopening themes, there are a lot of alternative names that we think are much more interesting than Zomato itself. So it's a different category altogether. But people who are sort of looking at the internationally listed names, looking at the duration play vis-a-vis where the US 10-year is, these names become, the loss-making companies continue to remain a lot interesting to a certain sector of investors.
Which are the concept stocks that you find attractive right now?
A few names. So, we have discussed, Rima, in the past that certain reopening themes are interesting. So, in round one, when people went out, they sort of bought a lot of material things, right? Dishwashers, washing machines, bicycles, etc. And I think whenever the round two happens, they'll want to invest in experiences and eating out and shopping a little bit. Past 2 years have been very difficult. And I think as soon as sort of the reopening happens in round two, we are likely to see interest there. So the names that we have held for the past are something like, say, an IRCTC, right? That company gets 1 crore subscribers coming to their website every day, 30 crores a month. And, when such level of people are coming to your sort of platform, there is a lot of opportunity for you to cross-sell. They're going into railway booking. Railway booking is something is there. They're going into bus bookings. They're going into airline bookings. And, they have a resident 500 odd crore net income, which can likely go higher towards the 800 odd crores in the next couple of years. So that is a very interesting name, that we have been holding so far. Eating out is going to be another thing. Drinking in India is the out-of-home concept to a large extent. So the other names we own in this category are United Spirits, as well as ABFRL is something that, when people go out and shop, here is a canvas where they can, buy something from 600 to maybe 6 lakh rupees in terms of whatever their requirements are.
Jigar, good morning, Prashant here. I mean, you're always a fountain of ideas, even at this level of the market. So let's hear it from you. What looks interesting even now? I mean, could be stuff we've discussed before, could be new ideas. What's in your mind?
Yeah, good afternoon, Prashant. So you are right. See, this level is interesting because narrative keeps changing, right? Initially in third and fourth quarter, it was how stellar the earnings momentum is. We have delivered the highest earnings growth in almost 13 years in F21, which was a COVID year, right? Now the narrative is slowly moving to inflation, and you will have views on either side of the aisle on whether it is transient or not. I might have some views, but the broader point, or rather 2 points I'd like to highlight here, is that historically, if you look at since the data is available 1991, the markets have not terribly been worried till the inflation is about 8 odd %. And between 8 and 12%, you see them getting a little nervous. Anything above 12 is where they get a lot jittery. One, we are still a little shy of their CPI is close to 6.3. So sometime before we get there. And secondly, if you go back enough in time, you'll see that there are times when the central government are a lot more constrained in times of, challenges. World War II initial pickup after the global financial crisis. So in such periods, you are okay to, have the interest rates at a lower end while the inflation is still high. And as investors, we might do very well to own businesses which have hard assets and maybe are moderately leveraged. So, commodity companies, we have discussed Vedanta in the past or JSW Steel in the past. Some associated sectors like infrastructure and banking. See, banking is very interesting even now, because if you look at all periods of history since 2003, they take a dive up, a dive down when the markets correct because of the leverage, and then they bounce back fairly quickly as well. I think that hasn't happened past December 2020. So banks continue to remain a lot interesting. The names we like there are ICICI Bank, SBI, HDFC Bank, and Federal.
I got that. Anything, and I know, I mean, at very elevated levels, and I think you've been doing this, moving away from, the mid and small caps to large caps, as you outlined earlier as well. But any opportunity still in that space, or you think broadly, I mean, it just makes sense to, buy businesses, if you like a sector, buy something slightly larger rather than go smaller?
Yeah, as the market cap weights go, last year we were very heavily into small and mid caps. This year, as the rally has picked steam, we have sort of got a lot more into large caps, much lesser in small caps. But see, one sector that has done fairly well for us has been mid cap IT. We have discussed names like Cyient, First Source, eClerx are the names that we have held. I think we continue to own those. Some, international reopening and China plus one strategy is working well. So we have historically discussed stocks like Fluorochem and Sudarshan Chemical. And maybe I'll add a new name in this space, which is Pocurna. It is a very small cap company. It is an exporter of, quartz and graphite and granites to Europe and largely US. And, if they had a call, I think a couple of weeks back or so, and then the plans that they outlined, if that were to transpire by, say, F23, first half of 24, then that company is still a quality company, close to 30% ROC, available at a very, like a single digit price to earning multiple. So, a quarter here or there could be bad, but if you're willing to hold it out, Pocurna is the name that we like and are invested in.
Jigar, thanks so much for joining in and giving us some of those stock ideas that you like. We'll slip into a very short break. We'll come back and get chatting with Keshav Murugesh, who's the Group CEO of WNS, who will be joining in to discuss the overall IT sector. They also reported their numbers yesterday, so we'll get some more color from a global perspective.